The US dollar has long held the title of the world's primary reserve currency. It's been a symbol of stability, a trusted unit for global trade, and the backbone of the international financial system. But how much longer can it sustain this position? And most importantly, how can you protect yourself financially in an era of potential change? In this video, we'll explore 1. The reasons behind the US dollar's dominance. 2. The emerging challenges it faces. And 3. Practical tips to safeguard your financial future. To understand the potential future of the US dollar, we need to first grasp why it has dominated global finance for so long. The story begins after World War II, when the Bretton Woods Agreement in 1944 established the US dollar as the world's leading currency, backed by gold. Countries pegged their currencies to the dollar, cementing its status as the foundation of the global economy. Even after the US abandoned the gold standard in 1971, the dollar retained its position, largely due to the strength of the American economy and trust in US institutions. One reason for the dollar's enduring status is trust. For decades, the US has been viewed as a stable economic and political power. Its transparency, financial regulations, and rule of law have instilled confidence in governments, central banks, and investors worldwide. The US dollar also benefits from being the primary currency used for oil transactions. This system, known as the petrodollar arrangement, ensures consistent demand for the currency, reinforcing its dominance in international markets. Currently, over 50% of the world's foreign exchange reserves are held in US dollars. This prevalence makes the dollar the linchpin of global finance. From trade agreements to sovereign debt, the world's economy relies heavily on the greenback. While the US dollar has enjoyed its position as the world's leading currency for nearly 80 years, it's not immune to challenges. The question is, what could potentially disrupt this dominance? One significant concern is the ballooning US national debt, which as of now surpasses $33 trillion. A high debt-to-GDP ratio can lead to doubts about the US government's ability to manage its finances. If investors and other nations begin to question the US's fiscal stability, it could weaken confidence in the dollar. The rise of other economic powers like China is another factor. China's economy is now the second largest in the world, and the country has made concerted efforts to internationalize the renminbi. Initiatives such as the Belt and Road Initiative have included deals that promote trade in local currencies, diminishing reliance on the US dollar. Geopolitical dynamics also play a role. With increasing competition between the US and countries like China and Russia, there is a push for alternative financial systems. Russia, for example, has been actively reducing its dollar holdings and increasing its gold reserves as a way to insulate itself from US-led financial sanctions. Perhaps one of the most profound changes on the horizon is the emergence of digital currencies. Central bank digital currencies, or CBDCs, could challenge the dominance of the US dollar by providing more efficient ways of conducting cross-border transactions. Additionally, decentralized cryptocurrencies, while still volatile, represent a shift in how people perceive and use money. With these challenges in mind, how much longer can the US dollar sustain its dominance? The dollar's resilience. It's crucial to acknowledge that the US dollar is deeply entrenched in the global financial system. Even as competitors emerge, transitioning from a dollar-dominated world to a multipolar currency system would take time. The vast majority of international contracts, loans, and reserves are still tied to the dollar. The inertia of this system acts as a buffer against rapid change. The slow shift to alternatives. While initiatives by countries like China and movements towards regional trade agreements hint at a future less dependent on the dollar, any major shift would likely take decades. The euro, for example, has made inroads but has not come close to replacing the dollar due to economic and political challenges within the eurozone. The role of innovation and adaptation. The US still leads in many areas of financial and technological innovation, which could help it maintain its currency's prominence. However, if the US fails to adapt to new financial technologies or falls behind in managing its fiscal responsibilities, the door opens wider for alternatives. Whether the US dollar holds its position for another decade or faces a gradual decline, it's essential to be prepared. Here are 3 practical tips to safeguard your financial future. Tip 1. Diversify your portfolio. The age-old advice of don't put all your eggs in one basket is more relevant than ever. Diversifying your portfolio can help protect your wealth from currency fluctuations and economic uncertainties. Invest in multiple asset classes. Consider stocks, bonds, real estate, and commodities like gold and silver. Global investments. Include international stocks or ETFs that give you exposure to other currencies and markets. This strategy helps mitigate risk if the dollar loses value compared to other currencies. Tip 2. Consider alternative currencies and assets. As central banks explore digital currencies and the world looks beyond the US dollar, consider diversifying into alternative assets. Precious metals. Gold and silver have long been viewed as safe haven assets, particularly in times of economic uncertainty. Cryptocurrency. While volatile, Bitcoin and other cryptocurrencies offer an alternative store of value that isn't tied to traditional financial systems. Approach this option with caution and research. Foreign currencies. Holding some savings in strong foreign currencies like the Swiss franc or the euro can provide a hedge against potential dollar depreciation. Tip 3. Stay informed and adaptable. The global economy is dynamic and staying informed is crucial for making sound financial decisions. Monitor economic indicators. Keep an eye on U.S. national debt levels, inflation rates, and policy changes that might impact the dollar's value. Continuous learning. Invest in financial education through courses, books, and trusted news sources to enhance your understanding of how global financial shifts may impact your investments. Be prepared to pivot. If signs of a major change become evident, be ready to adjust your strategy. Flexibility can be as valuable as diversification. The US dollar's position as the world's leading currency has deep historical and economic roots. While challenges lie ahead, any significant shift is likely to happen gradually. However, staying financially prepared is always wise. By diversifying your portfolio, exploring alternative assets, and staying informed, you can protect yourself and thrive in a changing financial landscape. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and share. And let us know in the comments how you're preparing for potential changes in the global economy. Stay safe, stay informed, and stay prepared.